Welcome to episode 4. We are here with Gustav Bessinger. You were supposed to say your name.
That's my name, yes. Thank you.
And today we're going to talk about how to build a business that thrives in a recession. Not a business that dives in a recession, but a business that actually does well and profits during a time where perhaps their competitors are struggling. So just a couple of interesting stats that I read in preparation for this. The OCR is obviously at 5.5%. Unemployment is forecast to sit around 5% this year. A net 6% of people surveyed in the ANZ Consumer Confidence Survey thought they would be better off this time next year. So a very small percentage of people obviously thinking that they're going to be better off this time next year. And consumer confidence is at its lowest point in 15 years.
Yeah, in a very long time.
Despite that actually removes COVID and that period, which obviously was a artificially inflated point for consumer confidence. But I thought that was quite telling. 15 years is a long time because we talk about 10-year cycles, but actually this is, in the last 15 years, this is the lowest point.
Yeah, no, I think there was another stat that I read the other day that card purchases is at its lowest level since the global financial crisis as well. You know, and that's not even being adjusted for inflation. So things are tough out there.
Things are.
That's for sure.
And interestingly, there are still some companies doing well. And against the backdrop of this low consumer confidence, I was really interested to read of two cheap cars who obviously on the stock exchange, and they reported a 2% drop in sales, but their net profit was 5 times higher than it was this time last year. And their gross margin percentage was gross margin was up 6 percentage points to 23%, which is massive. And so I thought that was a really interesting example of a business that right now consumers aren't making big purchases. A net 29% perceived that it was a bad time to buy a major household item. So despite two cheap cars being in an industry that should be is highly affected by recessionary behaviour and consumers' attitudes towards spending, they have still increased their profitability and their gross margin. So I thought today that we'd focus on what not to do in a recession and also what to do in a recession, some of the things, the mindset, the skill set and the behaviours that will set you up for having a great recession. So in light of that, let's start with the mindset. And a question that I really like and learned from Charlie Munger is this inversion technique, which is rather than asking what should you do, just ask what you shouldn't do. And so if we think about business right now, what's a recipe, if you will, for a really terrible recession, for coming out the back of this with a business that's worse off than it was going into it? And the thing that you pointed out was, well, firstly, just have no plan. Like, just do things exactly as you've always done them and don't have a plan to do anything differently.
Yes, I think it's for me, it's about planning and understanding, right? Or understanding and planning. I think you first need to understand the financials of your business. You need to understand the drivers. You know what drives costs, what drives sales. Those are the two most important things, is to understand that. And once you understand that, is to actually start planning according to what you know works for the business and what doesn't, or what drives revenue, or what drives costs, etc., etc. Because if you don't understand that in a recessionary environment, it will bite you. That's for sure. I think it's always important to understand, what drives your business financially, and understanding the intricacies around what makes the business tick from a financial perspective. It's always important to understand that, but even more so in a recession.
Yeah.
Definitely.
The stakes right now are high.
It's very, very high. Yeah, and I think, as you mentioned as well, like, you cannot ignore what's going on out there. So you have to start planning.
Yep, agreed. So if you do ignore what's happening out there right now, your sales will be affected, your profitability will be affected.
Yep.
And depending on the position of your business and how much cash you have in reserves, how much margin you have on your products or services right now, the impact of ignoring or consciously blocking out the environment will have an impact on your business. It's just a question of, well, how big will the impact be?
Yes.
In saying that, there is still opportunity in the market, and whilst you look at something like the car industry, for example, and you might say, well, it's a really bad time to buy a car, and lots of people are holding off, which is true. Clearly, some people are still purchasing.
Yep.
And the interesting thing around that stat on people perceiving it being a bad time to buy a household item, yes, it's a net 29%, but there's a whole bunch of people within. It's not a net 100%.
Yes.
So there's a whole bunch of people that do believe that it's a good time to buy a household item.
Yep.
And so the market for those people, if you can adjust your messaging and your marketing and understand your margins and key drivers within your business to be able to package the right products and services together, then there is a massive opportunity in this market. And I also would add to that, I think my mindset right now is, for myself and our clients, is, okay, well, what gives me confidence is knowing that if you think about the bell curve, there's a small number of people that are taking action and adjusting and doing things differently. And if you are doing that, if you are doing those actions, if you're planning and forecasting and refining your business through this period, well, guess what? You're going to be in the right end of the bell curve when it comes to results as well.
Yes, I totally agree. I think if you're just sitting there and waiting for things to change, yeah, I think you're going to go through a bit of hurt. And I think, yeah, I mean, if you look at, what could you do different? I think the key thing is to, as you mentioned before as well, is to look at how you market your product. So, I mean, how you sell something, but also what you sell. And what I mean by what you sell is, I'm not saying you need to change your business fundamentally into a business that, for argument's sake, sells bread, but now you're going to go and sell cakes. That's not what I'm saying. But what I'm saying is that if you're in a environment where there's a lot of financial pressures, recessionary environment that we find ourselves in today, how can you sell what you've always been selling, but give something or provide something that has the perceived value, right? So, I mean, if you're in the food and beverage industry or you're a McDonald's type business, that I've obviously always have value meals, but if you are in that same sort of industry, but you're not a let's sell bulk really cheap type of business, you could probably do something similar to that, where you offer people, still something that's a real good quality, of a premium product, but you are offering it in a smaller quantity so that they can still enjoy it, right? Because people still want to go out there and enjoy what, the normal things that they usually would. So maybe it's just repackaging that and giving them a cheaper version of still a quality product, right? So, I mean, a good example of that is actually a restaurant that we purchase takeaways from quite a bit, and they sent out a mailer this week saying that, you get X for free just for this week if you order something, and that would absolutely entice me to go there, because that's something that we always buy on top of what we buy from them, right? So it's small little things like that give them a small freebie, or, just repackage it, give them a smaller option so that they can still sort of, spoil themselves and enjoy themselves. And I think, getting back to Two Cheap Cars, they obviously understand what drives the business, right?
Yeah.
So, I mean, if they've been able to improve their GP margin by 6%, I mean, that's huge, it's tremendous. But, it's obviously a refocus on they haven't stopped selling cars, but they're obviously selling different cars, right? So,
That's right.
Yeah, so...
That's right. And I was really interested by the comments the CEO made. He said that the decision to focus on GM, gross margin, means the business is on a stable footing with a clear growth strategy. And to me, that's someone who knows what they're doing, right? That's somebody who has approached this environment with a clear strategy, a clear direction and impetus as far as improving the business goes. So
it comes back to that understanding and planning, right?
Yeah.
You cannot plan if you don't understand.
So so I think as a starting point, first thing to do and the first mindset is be prepared, have a plan, and spend some time thinking about the strengths and weaknesses of your business and the opportunities and the threats in the market right now. I think that's a fundamental starting point. And secondly, just to come back to a point that you made around the financial performance, the stakes are higher. So if you could get away with not understanding your financials in an environment, in a market where everything was trending up, now things are not trending up, more than likely in your industry. But in saying that, there are some industries that just are trending up. But as a general rule, your market is probably not trending up, at least not to the same degree that it was before, several years ago. And so let's talk about financials and understanding your financials. What are the key, firstly, what's the mindset around that people need to have right now?
I think the key thing is you as a business owner, depending on the business that you're in, if you've got a simple business and you just sell one product or one service, then you need to figure out how you can still get people to come to you and buy from you, right? But if you're a business that sells various products or various services, so there's a multitude of offers that you have out there, is you need to understand what makes you money and what doesn't make you money, right? That's very, very, very important. So you need to... I can use a good example of, let's say you've got a business that sells pies. Let's call it pies.
Can we use a real life? I'm just thinking. Let's use a real life example of one of our clients, for example.
Yes. Okay. So let's talk about one of our clients that are in commercial cleaning. So, I mean, they do commercial cleaning, but also specialized cleaning, right? So they do office cleans, but they also do building cleans, commercial building cleans. They do window washing. They do roof and gutter cleans, etc., etc., etc. So when they joined us initially, they never used to measure the performance of those different business segments separately. So they didn't know what made them more money and what made them less money. That's what you need to understand in an environment like this more than ever, is if which of those services are making you the best money. Because if you don't, you're probably going to focus on trying to sell just more of everything instead of selling more of the right thing and not focusing on the stuff that's not the right thing for your business.
Yeah.
So that's very, very important to understand. And that's where understanding the financial drivers of your business comes in. If I sell $1 more of commercial cleaning versus $1 more of window cleaning, what am I making from that $1? And if you don't understand your gross profit margins, you won't know what you're making. Right?
Yep.
So that becomes very, very important to know. For me to sell $1 of window cleaning, how much does that cost me versus $1 of commercial cleaning?
Yep. Exactly.
Yeah.
Exactly.
So that's really, really important. And then if you're not already running a lean ship in terms of overheads, it's probably a good idea to dive into your overheads to see where you can save money. I've experienced quite a few clients where, in the good times, they've paid for subscriptions, or they've got 3 or 4 subscriptions coming off their bank accounts, and they just forget that they're actually paying this, and sometimes in the good times it's not a lot of money, but I've had clients where they can save $1,000 a month just on cancelling subscriptions that they're not using anymore, right? Or stupid things like not reviewing their insurance on a yearly basis and just saying to the brokers, yes, just renew, but not having a look at what's actually sitting on their asset list, if they have one, or fixed asset register, having a look at what's sitting on there and making sure that stuff that's on there is actually still stuff that they're using in the business, and that's not part of their insurance cover. That's where you can save a lot of money, especially nowadays, or in the current insurance environment where insurance premiums have been going up between 30 and 40%. Could save you a significant amount of money. Looking at things like, I don't know, company credit cards and employee spend on, I don't know, like, you could give the guys a $500 a month budget to spend on staff welfare, but maybe you should scale that back, those type of things. So, if you're not already running a lean ship, I would definitely go look at that and see where I can fine tune that, because there might be a couple of $1,000 a month that you could save there, if not more, depending on how you spend money. And another thing is making sure that if you're spending money on marketing, you're spending it on marketing that actually brings sales. And the way that you know that is to measure it, right? So, not spending money on marketing that's ineffective. Yeah, because that's usually quite a big expense for people if they start spending money on marketing. That's for sure. So,
I think to go back right to the start is the first mindset that I would challenge people listening to this to adopt would be profiting during a recession rather than just holding ground. Because if you are focused on the actions and the questions, more importantly, the questions you need to ask in order to have a profitable recession, and that saying, shoot for the stars and maybe you'll hit the moon. That's the principle here, is if you're shooting for profitability and increasing profitability during a recession, like Two Cheap Cars are, then you will ask different questions and take different actions as a result of those questions. And so when it comes to finances, a helpful metaphor is that we just saw the Iranian president die in a helicopter crash, and flying in the mountains, lots of fog and inclement weather, and crashed into the side of a mountain. And I believe that right now for businesses, that those are the conditions. Things are foggy, rainy, you're in mountainous terrain, and it's high stakes. And so if you're flying the business without clarity on what your key dashboard or those key metrics in your business are telling you, it's like having your helicopter dashboard all blocked out, taped out, dials taped over or missing. And so the first one, exactly as you said, is, well, where do I make money and where do I lose money? What am I selling that's making me really good money, and what am I selling that's not making me such great money? And then obviously after that, it's, well, what am I spending money on, and can I adjust my expenditure around that? So I think that's really, really helpful, and we'll dive into that in a second. Let's talk about firstly the frequency. We'll get into the what people should be measuring as well, but how often do you think people should be measuring their financial performance or looking at those dials right now?
It depends on the type of business that you're in, but if you're someone like professional services, that's probably not going to be something that you look at on a daily basis, but maybe it's something that you want to look at it on a weekly basis or a fortnightly basis, at least a monthly basis. Any business, you have to review your month, right? You have to review your month, so your global sort of picture of where the business is going on a monthly basis. I mean, that's paramount. Otherwise, you just don't know, right? I mean, how do you know if you're running a successful business if you're not looking at the monthly performance of the business at least? But some businesses, so one business that I do work for, and another one that we do work for as well now, they literally having a look at least how they're doing from a revenue perspective on a daily basis. That's how often they are looking at. So the first thing they do when I get up in the mornings is have a look at the previous day's revenue reports to see how things are tracking. How are they doing compared to last year? Because that gives them an idea of, obviously, where are we heading? Are we struggling? What do we need to do? Do we need to look at providing an alternative product? Do we need to revisit how we market our products, etc., etc., etc.? That's the best way for you to quickly pick up something if something is going awry, is by looking at those revenue numbers on a daily basis. But it all depends on your business. But like I said, you can either look at it daily, but at least on a monthly basis, you should have a look at the global picture and have a look at how did we do. And preferably, you will know that I've got 3 or 4 sort of different business segments. So you don't just want to look at it on the from the global perspective in terms of this is how ABC Limited did my business. Let's say that I've got a business called ABC Limited. You don't just want to look at this is what we did for the month, but let's say ABC Limited had 3 different or 4 different business segments. You also want to have a look at those 3 or 4 different business segments and determine how they are doing.
Yeah, I think whatever the stakes are higher. So in my experience, people tend to undercook how frequently they measure their financial performance. They'll pick something that feels comfortable but isn't ideal.
Yes, and people don't seem to stick to a schedule either, right? So I think that's where you need to schedule in your financial
in your diary
meetings in your diary, right? Like you need to give yourself a deadline and say everything needs to be done by the 15th, and we will look at it by the 20th. Right, and schedule in a meeting reminder in your inbox or your whatever you're using in your Outlook or your Google or whatever, so that you know that there's time set out every month before the 20th. If the 20th falls on a Saturday, then it needs to be the Friday or whatever you want to call it. That's set out there, and you know that's when you have to look at your financials. If you don't have someone externally guiding you with that, or you don't have an in-house financial manager or CFO assisting you with that, that's definitely what you need to do.
Yeah, if you're not meeting once a month, then consider this a helpful or a friendly reminder to do that. As a minimum, I would suggest. And the way that we do it in our business is our boardroom clients meet on the last Friday of every month, and so we do our finance meeting after the boardroom meeting, and it works really well because we know it's the same time every single month, and we know what numbers we need to see, and we have a dashboard that we use for that, and our clients have a dashboard that they use for that, and the same set of numbers which they talk through each time. But as you said, if you don't have that support, well, at least book that with another person in the business. Maybe it's a co-director or your wife or a key person within the business. But book it and put it in your calendar and make sure that it happens at least every month. And then I would also add to that, the clients that we have within our business who do the best, they are obsessed with measuring the key drivers of their business. They are looking...
They become obsessed.
Yeah.
They weren't obsessed before they joined us, but they've become obsessed, and it's quite interesting to see that. And
they want to know. So it's not when it moves from a have to a want to or get to, then it becomes exciting, and it's like, how are we doing today? How are we doing today? Awesome. How's that?
I think that the key thing that you pick up when you work with business owners and you talk about the financial side of the business is that a lot of them don't know where to look and how to start measuring it. So naturally it's scary to have a look at something or review something that you don't understand. And I think that's what keeps a lot of people away from looking at it in more detail and more regularly. And I think the key thing with the clients that's joined us in the boardroom program is that we sit with them on a monthly basis and review alongside them, and we talk with them, and we get them more comfortable with the numbers, and we get them to understand the numbers. So it naturally becomes something that's not as scary to look at if you start understanding it.
Yeah, it helps when you're good at something. When you're good at something, it makes it more enjoyable.
Yes.
And so, talk a little bit about the cash versus accruals thing. A lot of people won't be familiar with those terms, but they're two different ways to look at your business's financial performance right now that tell a different picture, but they both have a critical distinction. So talk a little bit about that and why that's so important right now.
Yeah, so cash-based accounting is pretty much whenever money hits your bank, it's accounted for in your accounting system. So if someone pays you, it goes to income. If you pay someone, it goes to expenses. If you want to simplify it, let's assume you don't have any external debts or anything like that in your business. Accrual-based accounting is you start accounting for things as they fall due, right? So if a client owes you money, you'll send them an invoice from your accounting system, and it will create a or an asset in your accounting system whereby the client needs to pay you money by a certain time. So it will be sitting in your accounting system on the date that you create that invoice instead of when the money hits your bank. The income will be sitting in your accounting system, and the same principle then applies for supplier invoices that's sent to your business for expenses incurred by the business. So you would account for that expense when the supplier sends the bill to you in your accounting system. So that's an accrual-based accounting system. Is you're using the actual documentation dates as the transaction dates and not when the cash hits the bank. And the key thing to be cognizant of there is that a lot of businesses sort of run a hybrid system. So they've got an accounting system where they send out invoices to clients. That invoice date is when the revenues are created in the accounting system as being revenue, but they don't necessarily use the same principle for accounting for expenses, right? So they've got revenue sitting in their business in, let's say, May, which they'll get paid for in June in all probability if you are a business that's not working with consumers. But then when they pay the expenses, that's when they actually account for the expense, because they're not creating a bill in their accounting system for that expense. So that means that you've got revenue sitting in May, but your expenses is sitting in June, so they misaligned. So you don't actually know how you are doing for that specific period. And then if you're a business where sometimes and I've seen that sometimes you're a business or you're really, really bad with administration. Sometimes you might just only pay that in 2 months' time. So now you've got revenue sitting in May, and the expense isn't even paid in June; it's paid in July, right? So I mean, it's so far misaligned. So how do you make decisions based on that?
Yes.
You can't measure your financial performance if that's the way that you account for your business's finances.
Yeah, from a non-accountant's perspective, the way that I think of it is cash accounting is what my bank tells me, and accruals accounting is what I did on paper. So if I sent a bunch of in our business, we send invoices on the first of the month for that current month we coach, and so I look at that on paper and go, we did X amount of dollars, but then when the client pays us may not necessarily be in that month. So my bank might be telling me a different picture, and so when we look at that, how our business's performance for the period, we might go, oh look, on paper we actually did pretty good, but our bank account might show a worse picture, or on the other side, it might actually show me a really good picture. I might be flush with cash because I've had a bunch of people pay me from a previous month or a previous period. And so when it's about understanding that from both perspectives, and I think one thing our clients have found really helpful through the boardroom process and working with you on this is when they think they've had a bad month because of pay cycles or insurances coming out and all in one big chunk, and actually you show them how to adjust that over a period, they go, oh, actually it was nowhere near as bad, and in some cases it's actually a profitable month. Exactly. When it's adjusted correctly.
Yeah, but the thing is, you can't just look at cash, because I mean, there's you've got your expenses and your income, obviously, but then you've got things like, let's say you've got debt in your business as well, and you are paying down that debt. That's got an impact on your cash as well. So that's not an expense for business purposes, and I think that's where people get confused. It's the terminology around what's income, what's expenses, what's assets, what's liabilities, etc., etc., etc. But be that as it may. if you are someone that's really poor at administration, again, as I mentioned before, and your clients are paying you well, and you're taking 2, 3, 4 months to pay your suppliers, then you're going to think you're doing brilliantly, but you're not, right? Because eventually someone's going to get.
You got to pay the piper.
Yeah, you got to pay the piper. Someone's going to get pissed off eventually and come ask you, like, you have to start paying me. I've got a very good example of a friend of mine that runs a landscaping business. And she actually started doing work for quite a big property company here in Christchurch. And they gave her a lot of work, but they just didn't pay her. Right? So, and she had to hound them, and eventually she said to them, guys, I'm not doing work for you anymore. And they're like, why not? I'm like, because you're not paying me. And they're like, okay, we'll start paying you. So that's a really good example of someone like that. Like, she had to wait 2-3 months for them to pay her. So, I mean, they probably think they're doing brilliantly, but I would assume that they're not using their accounting system properly, and they're not accounting for bills on a monthly basis, right? So,
well, that's
you can't just look at cash, like, because if you aren't using an accrual-based accounting system, you'll probably never know what your real expenses are and what your real income is,
and what the true financial performance of your business is.
You won't.
And equally, though, I think right now the cash picture of your business is really important to keep on top of, because when even if you're doing good on paper, you've had a good month on paper, if all that money's sitting in receivables, like you said, then you're not in a great position. You're actually in a really risky position.
Yep.
And so I think having both those views is really critical right now. And if you don't understand them, then feel free to reach out. We can educate you on that, or get in touch with your accountant, who will help you with that too. So let's move on to the mistake that I see a lot of owners making right now, which is mistaking the desire for more customers with the desire for more profit. And what I mean by that is, right now there's a perceived scarcity of people in your market, most likely, unless your market's growing. But if you're in a market that's plateauing or declining, the fear is, I've got to get more customers. But in actual fact, you don't need more customers. You need more profit, or you want more profit, or at least the same profit. So let's talk through a couple of things that you can do there, and a couple of key distinctions. And the way that we do that, and all of our boardroom clients measure these numbers every month, is through your business chassis, which is called the 5 ways. And the 5 ways are 5 ways to increase your profits. They're 5 dials that you can adjust in order to get more profit out of your business. So the first thing is leads, and measuring your leads, and making sure that you are also, alongside of measuring and tracking those leads, is making sure that you are converting at a high rate. Because if I get a lead and I don't win all of those leads necessarily, unless they're a gimme, but generally you won't be converting at 100%. And so your customers, the people that you actually do work for, are a result of those 2 numbers. So what are you seeing right now in terms of those first 2 numbers, the leads and the conversion rate? What are you seeing, perhaps for our clients, that's working around generating leads and increasing their conversion rate?
I think generating leads is that's a difficult one. I mean, that sort of comes into sales and marketing, right? So you have to have a plan. You have to have a plan there, and you have to be able to measure your spend on those type of things. So I mean, that's generating leads specifically. I think conversion rate is something that's more. It needs to be formalized. There needs to be a standard operating procedure around that in any business. I think that's where businesses fall over. So for our clients where they've set up and it doesn't have to be. I mean, people hear standard operating procedure and are like, oh my goodness, it's going to take me days to build. It doesn't have to take you days to build.
People are quivering when they hear you say that.
It should just be like, what's the best way to make sure that I consistently follow up leads, right? That's what will lead to conversion. If you don't have that, it's not going to work. So again, coming back to a client, one of our clients, we've had this discussion with them before, and that has, by the by, they've increased their conversion rate significantly. They never had a standard process, right? So, there was never a standard process because it became too difficult because they didn't have a formal way of recording leads either. So, I mean, they've now switched over to a software solution that allows them to track leads, and they've formalized the process in terms of if they do send out quotes to potentially new clients or for potentially new work, that there's a formal process in terms of I send out the quote, I follow up after 3 days, 7 days, 14 days, and then I call it quits. But they rigorously keep to that, and they've got a reminder set up in the solution that they've got to send them, to give them reminders, and they can even automate the responses on the software solution in terms of following up open quotes, right? So I mean, that's the work's going to be setting up the email templates, right? And then obviously what they also have on top of those emails that are going out is making phone calls as well. And that's actually what gets them the biggest conversion is just that phone call. Alongside because I mean, we know everybody's not great at responding to emails or necessarily checking their inbox. Just that making that phone call makes a huge difference. So I think that's formalizing your approach in terms of how you go after potential new clients. That's what's going to increase your conversion rate. I think you can speak to leads. How would you generate more leads?
And it's a great question, one that is top of mind for a lot of people right now. And the first thing I recommend doing is to review what you are doing. So if you're spending money on marketing right now or not, review what your marketing activity is, because almost every business has some form of marketing activity. If you have an email signature on the bottom of your email, that is a form of marketing. It's an opportunity. And if you are posting on Facebook or you are making phone calls, like you said, if you have a website, you are doing marketing. So every business is doing marketing, but the question is, how effectively are you doing your marketing? And so the first thing is to review that. And we did this recently with a client who's spending a decent amount of money on his marketing. But interestingly, one of the forms of his marketing which was most effective and accounted for 60% of his leads was only a couple of grand a month. And as compared to some of his other strategies, which were costing much, much more than that. And so when you looked at the result versus the spend, there was a disproportionate amount of result coming from a relatively small amount of spend, given his marketing budget. And so now's the time to double down on those things or increase them and tweak them. And interestingly, with that, so the majority of his spend was actually coming from AdWords. He's spending a decent amount of money on AdWords, but there was this huge long tail of keywords which he wasn't even ranking for. And so the opportunity was in the long tail because the long tail actually was very long. It wasn't long and low. It was actually long and there was some decent volume in there. And so the first thing I would say is just review what you're doing and adjust accordingly. And the other thing around leads is don't ignore all the low-hanging fruit. So when I ask people, for example, do you have a database of your customers? Most people will say, oh yeah, we've got some form of a database somewhere. Maybe it's just a customer list in Xero. Well, that's still a database. It may not be usable, but it's there. And then the second thing I'll ask is, well, how well are you using that database? Are you leveraging that list of customers that you have? And 9 times out of 10, it's not very well. And so look at the customers that you've done work for previously as an opportunity, not just to get them to come back because they already know, like, and trust you, presumably if they've used you before, but also as a referral source. So another example of low-hanging fruit is referrals. Like, are you systematically asking for referrals, or are you just serving someone really well, giving them a 5-star experience, and then hoping that they'll give you a referral?
Yep.
So just in those two things alone, if you just did those two things in your business, you could significantly generate or increase the number of leads you're generating. And then as far as conversion rate goes, that's a whole topic in itself that we could spend an hour on. But I completely agree. The first thing is just document your sales process. Spend 30 minutes writing down each step in your sales process and who's responsible for what. I love your suggestion around an example of adding in a phone call and different touch points, different mediums at different times in the sales process is a really effective way to increase your conversion rate, as well as increasing the number of steps in it. So that's these little touch points. So the phrase I use is sales is like dating. If you the more steps you have in the dating process, the more little touch points and the different mediums you might be using will allow for a richer experience and increase the result at the end. So when you're dating your prospects and as far as business goes, that is how I think about the sales process very broadly. Again, we could spend a whole hour on that. But if you do those two things, then you will get more customers. And then once we've got those customers, we're now moving away from market share to wallet share. And that's the other massive opportunity right now, is around not just getting more customers, but the customers you already have, getting them to spend more and more frequently.
And that's where average dollar sale comes in.
Exactly.
Yeah.
Thank you for the segue. Yeah. So average dollar sale, just as an example of that, I was down at our friends Grizzly Baked Goods on Friday, and they have a 5 pastry, or buy 5 get 1 free pastry deal. And there was I watched a lady at the counter buy her 4 pastries, and the guy serving her said, do you know that if you buy a 5th one, you'll get the 6th, or sorry, if you buy the 5th one, you'll get the 6th one for free? And I watched her stand there, and she was like, oh, so if I buy 1 more, then I get 1 more free. He's like, yeah, that's right. And she's like, oh, okay, and I can pick any one. And it was like watching the neurons firing as she went, oh, there's this good deal. But she didn't realize it was 1 in, 1 out. But it also gave her a better experience, right? Because she's like, oh, I got a deal, and I get to taste another pastry that I wouldn't have tasted otherwise.
Yeah, and that's so clever, right? Because I mean, I did the same thing. There's a place where I go to buy a certain product, and they've got the same thing. You know, you can buy 3 for X, but you can buy 4 for Y, right? And if you make the calculations quickly in your head, an accountant as I am, you know, I always buy 4.
Yeah.
I don't always need 4.
No.
But I always buy 4.
Yeah.
Because why wouldn't I, right? So.
And
it's that perception of a deal. You're getting a deal, right? So,
yeah, and I think the art in that is making sure that those upsells or cross sells are tailored to the market right now, because the messaging matters right now.
Yes.
The context is people are a little more sensitive, and so whatever you're doing, whether that's generating leads or whether that's trying to get your current customers to spend more, you need to be attentive to the context and the mindset of the buyer right now. So upselling and just giving people the options is another mistake I see made all the time. It's like people just not putting all the things they do or packaging the things they do in a way that makes it easy for the customer. And if you do that, we're working with another client right now who's working on a checklist for he's in an industry that is quite seasonal, and so there's some things that his customers can do over the winter period, which they perhaps haven't thought about, but by giving the checklist to his customers and saying, hey, winter's coming up, here's what you should do, he's putting information in front of them that makes them go, oh, I didn't know that I should be doing that in winter. So part of your job in serving your customers is actually educating them into the various ways that you can serve them, because they are not they're not thinking about that. They are looking for the easiest route to get what they want. And so it's your job to put that in front of them in a checklist or packaging your products and services up in a really easy to understand way, and offering it to them is really critical right now.
And I think like that will, if you do those three things, it will naturally lead to an increase in revenue, right?
Yes.
And if you understand the drivers of revenue or the financial drivers of your business, you'll know which of those you want to chase in terms of getting leads through the door, in terms of converting those leads, and in terms of selling more to existing clients or new clients coming on board. So to increase that average dollar sale, and if you can change the dial there in terms of what am I going to go after? I'm going to go after the revenue items or the business segments that make me more money. You can dial up your gross profit margin, and as soon as you dial that up, you will see it sitting on the bottom line. Right. If you're already running a lean ship in terms of overheads, every % that you add, if you are selling, let's say your monthly turnover is $100,000. You add another $10,000, your average margin is 40%, but you are focusing on adding that $10,000 for revenue line items or on your business segments where you make a 50% GP margin. I mean, you're going to add an additional $5,000 on the bottom line. And it won't, nothing else will be impacted below the line. So that's pure profit sitting right there.
Yes. Yeah, and I think that's key when we're talking about average dollar sale is that we focus on those items or the services that do have a high gross margin. And if you don't understand that, then you might be adding things, upselling things that are not actually benefiting you particularly much.
Or you might be losing money.
Or losing money,
if you don't understand.
Good point.
The drivers,
As far as average number of transactions goes and getting people coming back, again, that's where I go back to your customer database and offering. I was recently had some trousers altered, and they had a voucher for that when you bring another pair of trousers back within a 30-day period, you got them for, I think it was 25% off, which was a pretty significant discount, but it was only if you came back within that period. And that's a really effective way to move your customers to come back to you, is offer them an incentive to come back within a short period of time. But more broadly, to zoom out from that, is what are you doing to get your customers back to purchase one more time? That's the first question, is what are you actually doing? Are you doing anything? And if you're not doing anything, well, where would you start? Because it's low-hanging fruit. It's so easy to just go back to someone who likes to hear from you, who likes your business, and presumably has had a good experience, and say, hey, come back and try this. Hey, you've tried this donut. How about this one? Hey, you've bought your trousers in to get them adjusted. Come back and bring another pair and we'll give you a discount. And so I think that's one way, and an easy mechanism to help you do that, again, going back to the databases, having a database that's actually usable, and having a plan around how often you go out to them, because a lot of times I see people with a database that they have used, but it just hasn't been used frequently.
Yeah, and I think like everybody pretty much nowadays is on zero or MYOB in terms of being, if you're a small business, if you've got a process in terms of, if you aren't a person adding the contact information in there, but you've got an administrator or someone who adds that information in there, that can become your database, because you can literally you can put in so much information into those systems, and then if you can get it out with email addresses, phone numbers, whatever the case may be, it's quite easy for you to then utilize that to start a bulk email campaign, marketing email campaign, or whatever the case may be. So it can be a really good place to keep data.
Yeah, and just on that, I just want to pick up on that because I think often when people hear us talk about these ideas, they go, "Oh, I don't have time for that. I'm busy doing whatever high value stuff." Use the people in your business who are less perhaps busy than as you are, and leverage their time. Administrators, get them to build the database, get them to go through the names and check through them, get them to send out or draft at least the email campaign. Obviously, you're going to need some input in there along the way, but leverage the people in your business, and they don't have to do the whole task, but they can do the donkey work, as I call it, the heavy lifting.
Yes.
For example, getting all your data out of Xero and into an email marketing software. You don't need to do that, nor should you do that as an owner. If you've got an administrator in the business who has the ability to do that, use them.
Yeah.
And will you use that same person to craft the offer? Almost certainly not. But use them to do the bits that they can do, and then you focus your time on the high value.
Yeah, and I think,
high skill.
I mean, adding to that as well is accept the fact that you might have to spend a bit of time to tell them what they need to do and give them the right instructions, but do it properly the first time around because it's going to save you so much time in future.
Mm-hmm. Absolutely.
I think that's another thing that people struggle with, or business owners struggle with. There's no one better to do it but me. But if you haven't tried to give that to someone else to do and haven't spent the time to do that because you're too busy, you'll always be too busy and you'll never have that time again. So
that's right. Exactly right. That's a whole nother episode.
That is all another episode.
All right, let's talk about margin. So we're winning the customers we're winning that percentage of the market that we should be. We've got those customers spending or maximize wallet share now, and now we're focused on margin and the profit from those customers that they've won and are serving. So what can people do to increase their margin right now? What are some of the low hanging fruits, if you will, around margin?
I mean, there isn't that many things that you can do to increase margin. Honestly, Marcus, it's either you increase your prices. Or you pay less for the inputs.
Mm-hmm.
Right, those are the two things you can do. There's nothing else that you can necessarily do. But what you can do is if you've got a business where you've got different business segments, as we've said before, is understanding what contribution those business segments make to your margin and focusing on the ones with the higher contribution. That's what you can do. Those are the three things you can do. There's nothing else you can do. It's really as simple as that.
It's a simple equation.
It's a simple equation. So price increases now is probably not going to be your best call, given we are sitting at in the economic cycle. So I would say try and negotiate with suppliers for a better price. We've had clients that has had some success with that recently as well, believe it or not. And make sure you understand what makes you money and what doesn't, right? So, I mean, if you're someone that sells products, I'm not talking about stuff that goes off necessarily. So I'm not talking about food and beverage, but I am talking about like physical stuff that you can touch. Hopefully you've got a system in place where you can analyze how much are you selling of which products and what are you making on those products. If you don't, you need to get one. As soon as possible.
I totally agree. Prices up right now, not the easiest thing to do. However, if you are going to do it, I would suggest small increases more frequently rather than a single big increase. With that being said, I think it's critical right now to be doing price increases more often than what you perhaps would ordinarily do them, because more than likely your costs are going up, your inputs are going up.
Very important.
And
That's
so if you're not reviewing your margins, if you don't, we've already talked ad nauseum about this, but if you're not reviewing how much money you are making from the products and services that you're selling continuously, You should be.
You should be. But I mean, you should do that.
You should do that in any case.
But I mean, if you're not doing it, it's a very good time to start doing it would be now. It's probably paramount that you start doing it now if you're not doing it.
Paramount. And I think another opportunity around that is what I call price pointing. So picking the products within or services within your suite of products or services and going, okay, which ones of these are not at the appropriate price point? If you just use a cost plus margin or markup formula, then you'll inevitably end up at a point beneath where the market will tolerate. And so it is worth going through everything you offer and going, okay, could we squeeze a little bit more out of this right now? But again, doing it in an incremental way, not just a bang, we're up 50%. Also around cost down, I think, as you said, don't discount the ability to negotiate in times like this. Because as you said, we've had clients that have successfully negotiated discounts. And remember, there's other things you can play around with. There's volume, there's frequency of purchase, there's shipping, there's a whole bunch of different things that you can play around with as far as negotiation. It's not just, hey, I want my price down. It's about working with the supplier and going, how can we adjust here so that it's a win-win, not just a win-lose. And the other thing I would suggest right now, which is it's always critical, but it's more critical than ever right now, is around productivity, like measuring the productivity of your people, tracking their performance and the key things that drive their performance within your business.
Very important, yes.
If you're not doing that, well, again, consider this.
It's going to bite you now if you don't.
Consider this a fair warning.
I mean, I can use an example of a client we sat with a couple of months ago, where they're in a services-based business, and we did a bit of an analysis of how they did this year versus last year, and they took on more people because they thought they were busier, and it turns out that because they didn't manage the productivity, they had this person come on board, but they didn't move the dial in terms of revenue, and they just made less money. And they didn't realize that because they weren't measuring it on a monthly basis. They only realized that a couple of months after the year end, when we actually sat down and looked at it, and we were like, mate, you've appointed another person, you have not moved the dial on revenue, and you've made less money. So what was this person doing? And it was like a light bulb moment for this client. Oh yes, I didn't realize that. It's like you would have realized that if you were measuring this on a monthly basis, right? So I mean, you've just added more stress to your life because you've got another person to manage in your business. More financial pressure. And you didn't gain anything out of it because you weren't measuring, right? So, very important to measure.
Yeah, and we didn't touch on cost down, but I think a really helpful exercise is to literally go line by line through your expenses, through your overheads, and go, where can we negotiate or price shop, especially for things that don't have a massive impact on your business, like moving phone carrier, for example, from switching from 2 Degrees to Vodafone or whoever how you're using. If you can do that and it's not disruptive and you are going to save a small amount of money, it's pretty easy to find 2 to 5% just going through line by line.
What I would say is have a look at, if you look at your overheads, have a look at the expenses that contribute 90% of your overheads and focus on those. So you're going to focus on the biggest ones, right? Get those, because usually for most businesses there's 3 or 4 expenses that would contribute 90% of their overheads, and that's where you're going to try and move the dial. You're not going to worry about the rest necessarily. Once you've been able to move the dial on those 3 or 4 big expenses, or the ones that make up 90% of your overheads, then you'll start jumping into the rest. But you don't want to spend time on saving money on things that it costs you more time than. It costs you more in time than it does in money.
Agreed.
Right? So, I mean, I'll give you a good example of a business that I worked with quite a while back, where, the financial director used to hammer me on things like telephone expenses. And I'm like, it took me a while to convert him, but I managed to eventually convince him that me spending time on trying to save us a couple of $100 on telephone expenses when we were spending thousands and thousands and thousands on vehicle expenses, employee expenses, et cetera, was just dumb. It just didn't make sense. So, the focus was on the big stuff, and then once that's done, we can go into the smaller things.
Yeah, and again, I would suggest leverage the people you have within your business to do this. You don't need to be poring over this stuff as an owner, but it's not that hard to go, hey, go get me 3 different quotes from a new power company and utilize their time to do that rather than yours. You can make the decision, but get them to do the heavy lifting.
Yeah, absolutely.
Cool. There's a few things for people to get started on.
Yep.
If you do want support putting together a plan to have a great recession, then we're here to help. I'll put a link where you can book a call in the chat below. Otherwise, we'll see you on the next episode.